Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now if you were or still are a keen chess player, you'll be glad to know that today is International Chess Day. 20th July is the day the International Chess Federation was founded way back in 1924, and International Chess is of course particularly special for the Standard Chartered CIO team, given one of our own team members is a chess champion himself, but definitely clear thinking several steps ahead strategically, which chess encourages, does help when looking at markets. Now, staying in the spirit of thinking a few steps ahead, there are three areas I'd like to focus on today, which we believe will offer some indication of where key asset classes may go from here. The first is investor positioning. One key fund manager survey released yesterday threw up some surprising results, demonstrating that professional investor positioning now appears to be at extreme bearish levels. For example, the survey showed positioning towards global equities was now at its lowest level since the 2008 financial crisis, while cash holdings were at a 21-year high. Both, of course, causing the author of the survey to note that there appeared to be a dire level of pessimism in markets. Now, we find this interesting because such extreme levels of positioning can lead to strong counter-trend moves in markets. The release of the survey likely partly explains the strong rebound in equities and other risky assets yesterday, but in our view, it does offer some optimism that one-sided positioning could trigger a slightly longer-lasting rebound in risky assets over the coming weeks. Now, a second factor we'll be focused on is European Central Bank policy. Media reports of the past day raise the possibility that the ECB may be considering a 50 basis point rate hike rather than 25 basis points that was previously expected and priced by markets. Now, if the central bank does indeed follow through with this larger move, it would bring policy rates out of negative territory and back to the zero threshold. However, as we said before, what is likely to be key is how any policy rate announcement is accompanied by details on the proposed anti-fragmentation tool. A larger than expected rate hike could put greater pressure on peripheral European bond spreads, creating worries about debt pressures on countries like Italy. But a relatively robust tool should alleviate such concerns and offer the ECB greater leeway to tighten policy as needed. Nevertheless, one asset class where repricing of expectations was most visible was the euro, which rebounded sharply to the 1.02 levels. A hawkish ECB is likely to offer greater support for the currency and feed into a broader view that a shift in relative rate expectations away from the US Fed alone should help create a peak in the US dollar. Nevertheless, we'd caution that from a technical standpoint at least, the euro currently appears to be in a range between approximately parity and 1.035 levels. That's a baseline expectation for now in the short term, unless of course we see catalysts for a firm break to the upside. Finally, a key event we'll be watching over the next couple of days is progress on the Nord Stream 1 pipeline. Recall that this had been closed for maintenance, but there have been concerns that Russian gas supplies to Europe may not restart, partly or fully, when the scheduled maintenance period ends on 21st July. A resumption of supplies is likely to alleviate energy market worries, adding to the increasingly positive mood in the short term on both risky and European assets. However, a failure to resume supplies could of course put upward pressure on energy prices more broadly. So overall, potential opportunities in a short-term risk asset rebound, in the range-bound euro, but of course we keep a close eye on the restart of the Nord Stream 1 pipeline. We'll pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.